All right. Well, good afternoon or good morning, depending on where you're dialing in from, or perhaps good evening. I know we've had several folks come in from all over the world to tune into these sessions here. This is a continuation of our Navigating the Coronavirus Economy series in week 12 this week. Hard to believe that we're coming up on a full 3 months of doing this, that we've all been trying to figure out the new economic conditions we're all living in. Today's topic that we will be reviewing and going over will be relating to the new PPP rules and guidelines that passed through Congress, was signed by the president, and now we're trying to figure out what they all mean. And so we had a guest on several weeks back that had spoken about the then current kind of guidelines and rules and interpretations, and now things have all changed again. And so today we've asked Robert Steinhardt, who's a CPA and partner with Carr, and Ingram. And Carr, and Ingram is the 20th largest accounting company in the United States. It's a large firm with clients all over, really, in many states all over the country. And I've worked with Bob, had the honor and privilege of working with Bob for, goodness, 5 years, 6 years or so now that we've been working together, and he's value his opinion and his viewpoints on things. And so today, the whole goal is to be able to share that information with all of you. So Bob, I'd like to turn things over to you if you wouldn't mind sharing with us just to get us started, maybe a little intro, a little background on you, and get us into this PPP overview.
Sure, happy to do it. Thank you again for having me, Tom. My name's Bob Steinhardt. I am a partner with Carr, and Ingram, as Tom was saying. I've been with CRI for going on 13 years and been in the accounting industry almost 20. I have clients in pretty much all 50 states at this point. I also have many clients who do business internationally. The majority of my work is done with entities. So I've been dealing with a lot of my clients who have taken out these PPP loans or are hoping for forgiveness. And, this whole coronavirus and the CARES Act and the EIDL and the PPP, all these acronyms has really kind of thrown the entire, accounting industry, not to mention the business environment in this country, for a loop. The rules, especially at some periods during March, the rules were changing on a daily basis and are, still kind of changing. I think they've gotten to a relatively good stopping point at this point, but, there is always a possibility that there's additional interpretations of the rules. And, as we get into the period of time now after the 90 days or 3 months of or 8 weeks actually, which was the original period of time that the people were able to use the loans to count against their expenses. We're going to have more people asking us questions about how much of these loans will be forgivable. How much of these loans am I going to have to pay back? And what are the terms going to look like as we begin to see our clients pay those back? So, on June 5th, there was as Tom was saying, there was some additional interpretations and hopefully some, final changes to the Paycheck Protection Program. The president signed a bill called the Payroll Protection Program Flexibility Act, which, as the name says, provided a little bit more flexibility for business owners in terms of paying back the loans, how the loans could be used, and what period of time they could use the loans to cover certain expenses. So, over the next few minutes, I just kind of want to go over that. I think the the first and most important thing that happened here is originally these PPP loans, to get full forgiveness on these loans, you needed 75% of the loan to be used against payroll expense. And that payroll expense had to be done basically within 8 weeks of the loan was funded. So the Payroll Flexibility Act, or the Payroll Protection Program Flexibility Act, has adjusted that somewhat. So now this new implementation has said that you can use the PPP loan. You only have to use 60% of that loan against your payroll expenses to have full forgiveness on the loan. So, that provides some extra flexibility for business owners who, may not have a large payroll that they're running, but their business is still really struggling, due to COVID-19. The other, I think, most important thing here is, how long you can use the loan against expenses. So previously it was the 8-week period after the loan was funded. Excuse me. And now the covered period is going to basically include the rest of the year. It's a 24-week covered period for loan forgiveness. So as long as you are using that loan to cover 60% of that loan has to be used for payroll, you can spread out how you want the forgiveness to be calculated over a 24-week period. The other thing that was really important here is that when the loans begin to come due, if you are not able to get full forgiveness on these loans, those payments will be stretched out now over a 5-year period and not just a 2-year period. It sounds like the interest rate on those loans is still going to be a starkly low 1% from what I'm hearing, which is, a really reasonable interest rate, obviously. But the great thing now also is that you can spread out those payments over 5 years. So if you have, if you are a business owner or you have clients who were, worried about having to pay that back so quickly, well, now you have 5 years to kind of stretch that out. And it really provides some extra flexibility, which is, I think what this bill was really aiming to do.
And Bob, a quick question that came in: how did these new guidelines or rules work for full-time employees? Are there any conditions or rules or guidelines relating around that? Is it the same? Has that changed?
So, yeah, so that I was actually just going to get into that. So it's funny you say.
Okay, great.
So there's now they've adjusted the safe harbor. So previously in the original PPP loan, there was a situation where you had to basically get back to full employment in terms of full-time equivalent hours by June 30th in order to get your full loan forgiveness on your PPP loan, in addition to having 75% of the loan cover payroll costs and these other requirements. They've now pushed that out to the 24-week period as well. So as long as you are back to full employment by December 31st, 2020, having the same amount of full-time equivalents as you did during the covered period, which I think, depending on the bank, you'll have a choice of when you can have that covered period be. A lot of banks are using the 8-week period before COVID started. Some are using 2019 as the covered period to kind of compare those full-time equivalents against. But as long as you get back to the same amount of full-time equivalents by December 31st, you won't have an issue, at least on that part of the loan forgiveness. So that's a really important part as well. Finally, I know I've had a bunch of clients who have gotten these EIDL loans as well. And with the exception of a EIDL loan advance, which at most was $10,000, the remainder of that loan was not going to be forgivable. From my understanding now is that you can use your PPP loan to cover or basically refinance whatever remaining EIDL loan you have in excess of that $10,000. So what that will do is the EIDL loans weren't nearly as cheap as the PPP loan. So they were more expensive than that 1%, but they will also, they'll also let you take the proceeds of your PPP loan to cover the balance on your EIDL loan if you so choose. There are still kind of a lot of moving parts going on here. The SBA is still trying to figure out exactly what Congress did with all of this, and Congress and basically the American public's been trying to figure out what the SBA has been working with, over the last 2.5 to 3 months here. So, we're all still, there's still kind of a lot of moving parts. The only thing that is consistent with this program so far has been change. So, until you get your loan forgiveness application in and it's approved, it definitely makes sense to keep an eye on exactly if there's been any changes. I know there are a bunch of different websites now that are providing loan forgiveness calculators. CRI has a loan forgiveness calculator, but unfortunately I'm not allowed to release that out to the public. It's proprietary. I've released it to a couple of clients that have been told, please pull it back. We're supposed to be doing it on our own. So I understand that, but we are happy to help you contemplate how much of the loan will be forgivable for you. If you get us the right information, we're happy to do that. So with that, I didn't want to talk too long, but any questions you might have on this Payroll Flexibility Act or any of the original PPP stuff, or any of the other COVID-19 coronavirus type tax and accounting issues, I'm happy to answer questions.
Hey, Bob, we did have a question come through our chat here that asked about when the new applications for forgiveness will be released by the Treasury. Do you have any idea of what that looks like?
I know they're still working on it. Last time I looked, and that was earlier this week, I read that they were still working on it, but they were hoping to have some sort of template ready over the next few weeks. I don't know. Let's see here. Yeah, I've gotten updated borrower applications, but that's applications for the PPP loan itself. I don't think the forgiveness applications have been released yet. I think they're still working on it. And those should probably be ready over the next few weeks. I think the SBA is going to release something, but then the banks are kind of all going to build their own sort of application on top of it. I would be surprised if it's a standard form that all the banks are using.
Okay, that's what I was wondering, if you had any speculation on that. So it sounds like whatever the SBA releases or comes out with, each bank will have their own application or process for that you'll have to work through your bank to go through. Okay, very interesting.
Yeah, it's just the IRS is so, in a nice way, I'll say complicated. So the SBA has just proven, unfortunately, before all this happened, the SBA, they had some regard for the U.S. taxpayer and how much work they were doing for the U.S. business owner. But it's just, they've basically been assigned this program and they didn't nearly have enough staff to deal with all of it. So they're already, completely overwhelmed by all of this. And, especially when basically Congress is writing things to say, listen, you guys have to implement all this stuff. Well, they're lucky if they can implement their own programs. Forget how the Senate is writing for them. Um, you know, so it is a work in progress. I know they want to get that application for forgiveness out quickly, because until they begin to ask for forgiveness, um, they can't begin to charge interest uh,
Hmm.
or principal on the outstanding loans that won't be forgiven. So
Ah,
it's really important
interesting.
for them to get that out there. Um, yeah, so basically what the law said is the extension of the deferral period for the interest and principal is until the date on which the SBA remits the loan forgiveness amount on a loan to the lender. And if the borrower applies for forgiveness, if the borrower applies for forgiveness within 10 months after the end of the loan forgiveness covered period. So basically, what they're saying there is the bank can't start charging interest and principal until they know what the forgiveness amount is from the SBA. So until the applications are out to figure out the forgiveness, that's just the first step in the process for them to begin to get repaid. Another thing I really kind of want to point out is, listen, the banks were kind of thrown into this, and they really had no interest in doing this either. They're basically not making any money on these. They are doing it because the Treasury and the SBA said, we're going to stop doing business with you guys if you don't implement this program for us. You can tell the EIDL loans, which were implemented by the SBA directly, it was a much smaller program, because they just don't have the bandwidth to handle all these loans. So that's why they've asked the banks, and I guess there's other financial institutions now that are also offering these PPP loans. That's why they've asked them to kind of implement these. But the banks and these other financial institutions, they're making very little on these loans. I mean, obviously, the ones that are fully forgiven, they're not making anything, or very, very little. They might make a small fee from the SBA, from Treasury. But even on the ones that are not forgivable, you're talking 1% interest. So
Right.
it's basically something that the government is requiring these banks to do.
And we had another question come in, Bob, about the owner's salary. We have a lot of clients and folks that are in that are, most of our clients and people we work with are small business owners. And so, this has been a common question that I know I've received and even wondered as a business owner: is the owner's salary included in the PPP as a deduction? Does that count?
Well, so it's kind of a loaded question because it depends how you're organized, right? Uh,
Okay.
if you are an S corporation, if you're actually paying yourself a W-2 salary, as you should be, then the salary up to $100,000 could be covered. The way they figure out that $100,000 is you're going to take your covered period, which was previously 8 weeks. So $100,000 divided by 52 multiplied by 8 will get you the amount of salary that can be covered by a PPP loan forgiveness. So I don't want to get too deep into the minutia here, but as long as the owner's salary is actually on a W-2, the answer is yes. Now, if you are organized as a single member LLC, basically a sole proprietorship, and you're not paying yourself on a W-2, they calculate the forgiveness on those loans differently. The way that loan forgiveness is calculated is they're looking at your 2019 net income from the entirety of the business, and they're dividing it by 52 and multiplying it by 8, and that's the amount of loan forgiveness they're going to provide for you there.
Okay, that's great. I think that's very helpful. And I would imagine most of our clients are an LLC or an S Corp for the vast majority that are tuning in here.
I've had a couple situations where, We have had clients who are S Corp. They're making that S Corp election to avoid self-employment taxes or payroll taxes for self-employed individuals. And then they didn't have a great year in 19, or they just decided they didn't want to pay themselves salary. And well, they're going to be out of luck on getting forgiveness on any, S Corp wages, because they didn't pay themselves any. There's no forgiveness.
I see.
So it can create a problem too, because they don't, if you don't have a W-2 wage and you're an S Corp, well, the government doesn't think you made any money, basically, because you didn't pay yourself a wage.
Right.
So there's not going to be any forgiveness there for owner salary if you didn't pay yourself an S Corp salary.
Great. And we had another question come in. I think this is another great question for us. In terms of reopening requirements and staffing, and there are many industries that are not allowed to, when they are reopening, take, for example, in this case, she mentioned being the childcare business, or even in the food service business, where you're just not bringing back the same amount of staff COVID-19. How does that impact what's going on here?
A lot of people have had this problem. I have a bunch of restaurant clients who, they're not going to get back to what they're calling full-time equivalents for a very long period of time, right? You're going to have social distancing in restaurants. You're going to have social distancing in daycare facilities where you're only going to be able to bring in half staff, have half as many kids being watched, selling half as much food, having half the tables filled in a restaurant. Well, that's why they've extended the covered period now to December 31st, 2020, with the hope that, 6.5 months from now, we're through this, and that you can get your full-time equivalents back up to where you were before COVID-19. Now, what I will say, and there's already been kind of rumblings in the accounting industry with this, is that if we're still in a very similar situation now, in December to where we are now, they might strike that whole full-time equivalence language from the law, because they know that you're going to have a large share of people in this group that have taken out these PPP loans, that they're just not going to get back to the full-time equivalents with COVID-19 still out there.
Yeah.
And choice, it's there's state requirements that they can't. So it's a really it's an important point. Again, the hope is that they can get back. We'll see where we're at 6.5 months from now. God willing, there's a vaccine. But I think also part of this, what people are realizing now, that the comeback from this is going to be an extended period of time. So even if there's no state rules or shelter in place requirements or social distancing requirements that we have now, even if they're not there in December, the chances that we're back to a full steam economy by December are pretty weak. I don't see that happening right now, unfortunately. It's just there's been a lot of pain. We have 42 million people unemployed in this country now. It takes much longer to bring those jobs back than it does to release those people from those jobs. We can all hope that it comes back, because all our businesses do well if the economy is doing great, right? But it's just it's going to be a process. So I have a real feeling, and I think there's a feeling in the accounting industry, that if we're in a slow economy, we're over 10% unemployment still, in December, that they're going to strike that language from the law, so that the full-time equivalence language goes away. Now, I wouldn't count on it happening until December 29th. That's how the government works. It used to be that the government would pass these tax extender bills, to extend certain tax items right at the end of the year, whether it's for depreciation or tax credits or other things, and those would always happen at the last second, or they might even happen retroactively in the year after, the tax year. That happens frequently as well. So, let's hope that if there's still real economic pain later in the year, that they strike this language early, and the U.S. business owner is not so worried about this full-time equivalent language.
Great. No, that's wonderful. And yeah, it is funny, those congressional midnight, midnight votes that are right before a holiday or a break or a session or something.
It's like they're all in college all over again, right? Aiming at midnight because they don't want to get anything done during the day.
Right. Oh, that's funny. That's funny. Well, additional questions from our viewers and folks that are tuning in, just listening. Any questions here that you may have? If you are dialed in from a phone and you're not in front of a computer to type, feel free to unmute and ask a question here.
A quick question. For the forgiveness period, can you still choose the 8-week period? What
yes.
if?
So the answer to that is yes. If you prefer to use the 8-week period to calculate your loan forgiveness, you can do that. Now, that's a little worrisome because some people might use that 8-week period to get their full-time equivalents up and then release a whole bunch of people right after that. So I think what the government was trying to do there was avoid, that happening. Right when the PPP came out, a lot of us thought, yeah, we'll get back to full employment for a few weeks right before June 30th, and then, we'll have a ridiculous unemployment number in July. I think they're trying to avoid that if all possible.
So, okay, so what if you, let's say you decide to do the 24 weeks, but maybe you run out of money within 12 weeks because it's, your payroll takes up all of that. Can you apply for forgiveness before the end of that 24 weeks, or do you still have to wait the full amount of time?
So no, I believe you will be able to apply for forgiveness before the end of the covered period if the money's all used up. Again, the forgiveness applications aren't out yet. So I think there's going to be some additional language coming out over the next few weeks to discuss when you can apply for forgiveness, what the process is going to look like. Again, there's going to be an application. It's going to get released to the public, but it's not really going to be beneficial because you're going to have to apply for it through your bank.
Mm-hmm.
Or the financial institution that issued the loan in the first place.
And to kind of follow in line with that, we had a question come in, Bob, that asked, did they maintain the same line items like mortgage interest, rent, utilities, and those kinds of items that are forgivable still?
Yeah, so the answer is yes to that. And those amounts are up to 40%. Mortgage interest is an interesting, argument because I think a lot of people are under the belief that it includes, your home mortgage interest, right? If you're a self-employed individual, and the answer to that is no, it's a business mortgage, right? So if you own a property through the business, the interest on that will be forgivable, but it's not your home mortgage interest. So don't try and pay your home mortgage interest with your PPP loan if you want it forgiven.
Got it. Great. Good point there. Thank you.
I have another question. I know there's been some talk about the 60% being like a drop-off point almost. Like if you don't reach the 60%, it's all or nothing. If you're at 59%, you're not.
So there was originally some worry about that because the original language said, yes, 60% all or nothing. But the SBA came out on Monday and they clarified that point to say, no, it's not 60% all or nothing. If it's 59%, we'll just reduce the forgiveness amount by, 1% or whatever they calculate the difference to be. But it's not 60% all or nothing. Yeah, there was some worry about that. I had read a few articles over the weekend that people were really scared about that could be happening, but it turns out the SBA has clarified that already and said, no, that's not going to be the case.
Great. Additional questions for Bob while we have him here. These have been great questions.
Yeah, I have one.
Yes.
All of my employees are very part-time. They work 4 and 5 other jobs. Okay. I'm an after-school program.
Right.
So all my schools are shut down.
Right.
So now we went virtual. We're having a great time at this. So what's happening now is I have some instructors I'm putting to work planning new programs.
Right.
And they're working for me, but they're not billing me their hours. They're working for me for free. I'm not saying that. They're saying that because they want to collect unemployment.
Okay.
But they're getting unemployment for more people than just me because they work 2 other jobs.
Right.
So how am I managing this?
Okay.
They say I didn't work last week, and I'm like, yeah, you did.
Well, okay. So first things first, that increased unemployment will run out before the extended covered period now, right? So that increased unemployment, I think, I don't remember the exact date it ends, but at some point, either later in the summer or early in the fall, is going to come to an end. So the unemployment maximum will go down to 5, or, it will go down significantly, reduced by probably about $600 per person. So these people
Right.
who are getting this increased unemployment are going to want to jump off unemployment if they're getting paid more than, $285 a week or something like that. So, the goal will be for you is to get them back to full-time equivalent status or have as many full-time equivalents, by December 31st, and then you should be okay in terms of forgiveness. Now, with you, if you have a lot of employees working 4 or 5 hours a week, the full-time equivalent calculation gets a little bit more complicated. You're gonna have to figure out how many hours each of them were working during the covered period and how many of them, how many hours they're working, on December 31st. But in the end, the increased unemployment is coming to an end relatively soon. So
And Bob, I think it's the end of July, I believe, is when that happens. End of July or sometime in August. I think it's right around there.
So, in all likelihood, you're going to have a whole bunch of people who are going to drop off unemployment and go back to work. At least we think so. We hope so.
Renee, does that help a little bit there?
It does.
The one
Yes,
thing
it's nice she's working for free.
Nothing in life is free, Renee. The other thing I'll mention with the increased unemployment is if the economy is still the way it is, there's a possibility they might extend that. Wouldn't shock me. Again, if we're at above 10% unemployment at the end of July, which seems relatively likely at this point, it's possible they might extend that increased unemployment. It becomes a difficult question at this point because the government's already spent about $4 trillion on trying to fix the ills of the economy due to COVID. Well, at some point, there's how much more money can they take? So
right.
It's going to be an interesting question. But if there's still real financial pain with the U.S. taxpayer, it's possible they extend that unemployment period. We'll see what happens.
Thank you.
You're welcome.
Thanks, Bob. We had another specific question here that came in talking about rent and LLCs, where the way it sounds like from the question, it says one LLC owns the building and one owns the business.
Yep.
So technically the business has a rental agreement with the building LLC, but the business has always cut a check to pay the mortgage directly to the bank. How would that fit into this, renting kind of, forgiveness? What do you see for that?
Well, it's an interesting question. I have a lot of clients who set up their businesses this way. They keep the assets in one business and the operating activity in another.
Mm-hmm.
As long as you have a standing rental agreement and you're paying according to a specific schedule, I don't think the SBA has any argument that you are not renting. So you really should be okay there. Now, would it be my recommendation to actually pay the rental company and have the rental company cut the check to the mortgage company, yes. I wouldn't make that direct payment. I like to have a trail of payment for situations just like this, where you're trying to prove that you're actually renting property. That would be my recommendation. But, you know, even if the SBA comes back and says, you know, you're not really renting, you're paying a mortgage. Well, okay, fine. It's a business mortgage. So you're probably going to get forgiveness on that as well.
Okay. Okay. That's great. Thank you. Additional questions for Bob while we have him? Well, I'm not seeing anyone chime in right now. If anything comes up here in the next minute, please feel free to type or intervene here. Bob, are there any closing comments or remarks you'd like to share with everyone on this?
What I'm going to do is I'm going to leave my contact info in the chat box.
Great.
And I'll leave my direct office line as well. If you guys have any questions or need any assistance, I am happy to help.
Yeah, and thank you, Bob. And for anyone who is looking for additional guidance, support, what have you, Bob is fantastic, and I think you can tell from the presentation here. So I know he'd be happy to help support you in any way, and help you through this process as we're all trying to figure this out together. Bob, anything else in closing here?
You know, I think I mentioned it before. The only thing that's been consistent with all of this coronavirus economic help has been change. So, you know, before you fill out any sort of forgiveness application or try and get a PPP loan right off the bat, you know, you haven't done it yet. You know, make sure that you speak with a qualified professional so you understand the rules and exactly you know, what will be forgivable and what won't be. You know, I've had a couple of clients come back to me and say, I should have asked for more of a PPP loan now that it's 60% instead of 75%. I don't know if the banks are doing that, but it might be worth picking up the phone and calling your banker and seeing if that's a possibility. You know, it doesn't hurt to ask, as my mom always said. So with that, I'll leave it at that. I've left my email and my direct office line. And if anybody has any questions, feel free to give me a call.
Great. Well, thank you so much. We appreciate it, Bob. Again, Bob Steinhardt with Carr, Riggs and Ingram. He's a partner with the firm, and we are so grateful and thankful for you to join us and share your wisdom and knowledge and just some general opinion and advice here to help us all continue through this. So thank you so much.
And thank you for having me, Tom.
We appreciate it. Thanks, Bob.
You guys have a good one.
Okay, thanks. Bye-bye.